Hey everyone, welcome back to Money Moves Made Easy TV. If you've been wanting to start investing but don't know where to begin, or if you think you need a lot of money to get started, then this video is for you. Investing may seem intimidating, especially if you're starting and have limited funds. However, building wealth through smart investments is achievable for anyone willing to start small, learn consistently, and think long-term. Whether you aim to secure your future, achieve financial independence, or grow your savings, starting with little money is not a limitation. It's an opportunity to build good habits. This guide breaks down the essential steps to help you navigate the world of investing with confidence and purpose. Before we move on to the video, don't forget to like and subscribe to the channel to see more finance videos like this. Why start investing? First, let's talk about why you should consider investing in the first place. The primary reason to start investing is to grow your wealth over time. Unlike savings accounts that offer minimal returns, investments have the potential to outpace inflation and multiply your initial capital. Investing enables you to achieve significant financial goals, such as buying a home, funding education, or retiring comfortably. The earlier you start, the longer your money has to grow, thanks to the power of compounding, where returns generate more returns. It's a key tool for securing financial stability and unlocking opportunities for your future. Step 1. Set clear financial goals. Before diving into investments, identify your goals. Are you saving for a short-term goal like a vacation or a long-term objective like retirement? Knowing your purpose will determine the types of investments you choose. For instance, short-term goals may require safer investments, while long-term ones allow for higher risk, higher reward options. Write down your goals, prioritize them, and ensure they are specific, measurable, achievable, relevant, and time-bound. Step 2. Build a basic emergency fund. First, before committing money to investments, build an emergency fund. This fund acts as a financial cushion, covering unexpected expenses like medical bills or car repairs, so you don't have to dip into your investments prematurely. A good rule of thumb is to save 3 to 6 months' worth of living expenses in a high-yield savings account. This step is critical to avoid selling investments at a loss during emergencies. Step 3. Understand different types of investments. Familiarize yourself with various investment types and their risks. Stocks represent ownership in a company and offer high returns, but with higher volatility. Bonds, loans to governments or corporations, providing steady income with lower risk. Mutual funds and ETFs, pooled investments offering diversification. Real estate, physical properties or real estate investment, trusts for income and appreciation. Cryptocurrency, high-risk digital assets with significant return potential. Understanding these options helps you make informed decisions aligned with your goals and risk tolerance. Step 4. Start small. You don't need a lot of money. Contrary to popular belief, you don't need thousands of dollars to start investing. Many platforms allow you to begin with as little as £5. Fractional shares enable you to buy portions of expensive stocks, while apps like Acorns or Stash round up your everyday purchases to invest the spare change. Start small, be consistent, and focus on building the habit. Step 5. Choose an investment platform. Selecting the right investment platform is a crucial step for beginners. Start by considering platforms regulated by the Financial Conduct Authority, FCA, as this ensures your investments are protected. Look for platforms offering low fees, user-friendly interfaces, and a range of options such as individual savings accounts for tax-efficient investing. Popular UK platforms include Hargreaves Lansdown, AJ Bell, and Vanguard, which cater to different investment needs. Compare features like minimum investment requirements, available funds or stocks, and customer support. If you're unsure, platforms with robo-advisors can provide automated, low-cost portfolio management tailored to your risk profile and goals. Step 6. Start with a diversified portfolio. Diversification minimizes risk by spreading your investments across different asset classes, industries, and regions. Instead of putting all your money in one stock, consider ETFs or mutual funds, which provide instant diversification. A diversified portfolio reduces the impact of poor-performing investments and ensures steady growth over time. Step 7. Be patient and think long-term investing is not a get-rich-quick scheme. It's a marathon. Market fluctuations are inevitable, but long-term investors benefit from riding out these ups and downs. Focus on your goals and avoid impulsive decisions based on short-term market changes. Historically, the stock market has trended upward over the long term, rewarding patient investors. Step 8. Reinvest dividends. If your investments pay dividends, reinvest them instead of cashing out. Reinvesting dividends allows you to buy more shares, accelerating the compounding effect. Many platforms offer automatic dividend reinvestment plans, making it easy to grow your portfolio without additional effort. Step 9. Keep learning and adjust as you go. The investment landscape evolves, and staying informed is essential. Read books, follow financial news, and take online courses to expand your knowledge. Regularly review your portfolio to ensure it aligns with your goals and rebalance it if needed. Adjusting your strategy over time ensures you stay on track and adapt to changing circumstances. Let's quickly recap the steps to get started with investing. Understand why investing is important. Set clear financial goals. Build an emergency fund. Learn about different types of investments. Start small, even with limited funds. Choose the right investment platform. Diversify your portfolio. Be patient and think long-term. Reinvest dividends. Keep learning and adjusting your strategy. Starting your investment journey with little money is not only possible, but also rewarding. By setting clear goals, building a foundation, and consistently learning, you can create a robust portfolio over time. The key is to start now, no matter how small the initial amount. With patience and perseverance, your investments will grow, paving the way to financial independence and a secure future. Check out all the related resources and download the helpful links in the description below. Don't forget to subscribe to Money Moves Made Easy TV for more tips on managing your finances and building wealth. Remember, every small step brings you closer to achieving your dreams. Stay tuned for more content to help you make smarter financial decisions, and happy investing!